Hi, I am Shweta from ClearTax and today I will speak about how to calculate your income tax. In this video, I will provide you a step-by-step guide for income tax calculation. The first step is to aggregate income from all sources, namely income from salary, income from house property, income from business or profession, income from capital gains and income from other sources. You can claim exemptions while calculating income under each of the heads of income. Let us take the first head, income from salary. While calculating income from salary, you can claim a deduction for standard deduction tax on employment from the gross salary. You can also claim exemptions such as house rent allowance and leave travel allowance to arrive at the net salary. Under income from house property, you can claim deductions for the municipal tax paid. You can claim deduction which is a standard deduction of 30% and also a deduction for interest on home loan. In case your property is self-occupied, you can only claim a deduction for interest paid on home loan up to a maximum of Rs 2 lakh per year. Under income from business or profession, you need to offer your taxable income from your business or profession. You can arrive at the taxable income from your book profits after making adjustments for tax allowances and tax disallowances. Under capital gains, you can offer gains made on sale of assets such as shares, such as immovable property. While calculating the gains, do note that you can also claim the exemption such as exemption on capital gains on sale of a residential property, also such as the basic threshold exemption of Rs 1 lakh in case of sale of listed equity. In case of income from other sources, income such as interest income from savings bank account, interest income from fixed deposits, bonds, debentures, etc. will be offered to tax. After aggregating the income from all the sources, you will arrive at the gross total income. From the gross total income, you can claim deductions for tax savings, donations, medical insurance, and other tax deductions. After claiming the tax deductions, you arrive at your net taxable income. The net taxable income forms the base for calculating the income tax. The income tax slab under the existing tax regime are a 5% tax rate for income from 2.5 lakh to 5 lakh, a 20% tax rate for income from 5 lakh to 10 lakh, and a 30% tax rate for income above 10 lakhs. From the financial year 2021, individual and HUF taxpayers can opt for a new tax regime in which they can pay taxes at a lower rate. The new tax slabs are from 2.5 lakh to 5 lakh 5%, 5 lakh to 7.5 lakh 10%, 7.5 lakhs to 10 lakhs it is 15%, and 10 lakhs to 12.5 lakhs it is 20%, 12.5 lakhs to 15 lakhs it is 25%, and above 15 lakhs it is 30%. Though the rates are lower, the new tax regime does not allow you to claim any tax deductions or exemptions. After you calculate your taxes as per the slab rates, you can claim a rebate under Section 87A in case your total income is up to Rs 5 lakh. In other cases where the total income exceeds Rs 5 lakh, need to add education cess at 4%. You may be liable to pay a surcharge in case your income crosses certain threshold limits. After arriving at the net tax payable, that is the basic tax plus education cess and surcharge, you can claim deductions for advance tax, TDS and TCS and any other tax credits such as foreign tax credits. The balance tax, if any due, should be paid as self-assessment tax. This is the end of the income tax calculation. You can use the calculation for filing your tax returns and for knowing whether you have any balance tax dues or you are entitled to a refund. Do like and share our videos and do not forget to hit the bell icon for notifications. Thank you.